Ah, we're good.
Hey, Jason, thanks for jumping on. I got the VA boss here, our most favorite loan officer for VA loans. And I asked him to jump on because there was a great question posted in one of the spouse pages today for Fort Cavazos. And it led me to believe that, if she has this question, most people have this question and they really need to know how to hack this interest rate. So I called Jason immediately and said, hey, let's give a best answer for her. And then I thought, let's just do it on video so we
Yeah.
can post it and we can answer others. So her question was, Jason, can she use a grant with her VA loan? And I think the purpose of that was her asking, could any money be used for whatever they want on there? And her point was to buy down her interest rate for as much as she can. So
Sure.
let's talk about that. Are there any restrictions on monies from any nonprofits? Is there any restriction on buying the rate down? Like who can buy it down? What's the difference in a 3-2-1? What's the best strategy for our military families to use with a circumstance like this?
Yeah, it's a great question, especially with the environment that we're in now. Rates are coming down, and there's money out there. So a couple of ways to give people the correct information on this is that if if they're going to get a grant from a county or city government, there's a lot of those out there. So check with wherever you live. Maybe they have that type of money. The VA has no restriction on how you can use that. The only restriction that the VA will put on it is if you were to pay over appraised value or something like that, it has to come from your own funds. So it can't come from borrowed money. If it's
Okay.
talking specifically to interest rate, the grant could put a restriction on what you could use it for, but the VA has no such restriction. I haven't seen a grant program like that, a city government or something like that, put restrictions on how they can use it. The only time you'll see that is if it's a state bond initiative. They control the interest rate, they control the funds, they control what you do with it. So, but if it's coming from a grant, brother, sister, uncle, anything like that,
Nonprofit that's giving them
nonprofit,
money that they got.
employers can give you money. I've seen those programs within your employment agencies. If they're veterans working for a specific employer, the VA doesn't have any restrictions like FHA does on where that money can come from.
Oh, that's
That is
amazing.
one of the misnomers.
Yeah, one of those myths that people don't pay attention to. So
100%.
let's strategize about telling folks, not just our military families, but buyers on how to hack that. So we know that sellers can pay it, and you were telling me there's a difference. So the 3-2-1 buy down is different from a buyer just paying and buying the interest rate down. Talk about that.
Right. Yeah. So obviously, right now, temporary buy downs are a very popular thing, and rightfully so. They're not a one size fits all model for everyone. So be careful on how people sell that to you. It's not a forever strategy, obviously, because the rate goes back to its full indexed rate, whether you do a 3-2-1, a 2-1, or whatever that looks like.
Well, give us
Okay.
a quick synopsis of what that means. What is a 3-2-1 or a 2-1? What does those numbers mean?
Yeah. So a 3-2-1 is basically, let's say that your rate was 6% today. When you do a 3-2-1 buy down, the rate for the first 12 months is 3% lower. So it would be 3%. Your rate for the second year is 2% lower, 1%, and then back to that 6% at the start of the fourth year. So the thought behind it is, hey, maybe we buy down your rate to where we time the market. People are using that a date the rate thing. I'm not a big fan of that simply because we don't know what the market's going to do. We're trying to live in the here and now with that. So, those temporary buy down strategies are great. They're not a one size fits all model, but the buyer cannot pay for a temporary buy down. The
Only the
seller,
seller or
only
the
the
builder,
seller
which
or the
is the
lender
seller.
or builder, whoever that is. It cannot be the veteran or the military member because, in a sense, it's not a benefit to them because they'd be prepaying their own interest.
Right,
Doesn't
I
make
get that. But the hack here for especially a 3-2-1, because it's longer than a 2-1, is that most military families PCS at 3 and 4 years. And so they could milk that rate for the time they have that house,
sure.
which could be a benefit to them. Now, if you're keeping it long term, I see how it could get you. But if it's just going to 6% and that's today's rate, well, that doesn't scare me. And
Yeah.
that hopefully it gets a little bit below it so I can then refinance, especially if you're going to keep it as a military family to build wealth through real estate and rent it,
Yeah.
let somebody else pay it off. You do want to be more conscientious about that. But I say milk it. Let's switch gears to how the buyer can pay out of pocket to buy it down that's not on the seller side, like a 3-2-1 or a 1 buy down. How does that work, and how much does it cost, and what do the factors include?
Yeah, so this is where, I'm going to highly encourage everybody who listens to this, and please share this with people, is that this comes down to financial assessment. There's a break-even analysis that every loan officer should be running for their clients about giving them the options about permanently buying down their interest rate where that money is coming out of their pocket. Because let's look at a $250,000 purchase price. That's about $23 a month per 1/8% in interest. Okay, so it's not life altering,
Right?
And I think that's where people they kind of miss that.
Yeah, the math ain't always mathing.
Right, and I think we have made buy downs and rates so sexy that we forget to talk about the math. And so this is where I'm going to encourage everybody to have that conversation, or at least know this, that if you're paying for your own buy down and it costs you 1%, okay, so $2,500, you may buy your rate down maybe 3/8%, okay, somewhere
And we
around
call
there.
that buy down points, so everybody knows the terminology associated with it. When you buy down to rates, you're paying for points.
Yeah, that's the terminology we use, and 1% is 1% of the loan amount. That's 1 point. So, okay, let's say that's 0.375%. Sounds like a lot, but in mortgage dollars, that's about $69 a month in a payment on a $250,000 loan. Okay, so you take 69 times 12. Okay, so 69 times 12 is $828 a year in interest. Okay, if you spend $2,500, that's going to take you approximately 3+ years to recoup the cost of that buy down. Now, this is an active duty family who may be at that duty station for 3 years. Doesn't make much sense, right? This is where we would try to advise them. Okay, so let's look at what the $2,500 would do in an index fund, or maybe a high interest savings account, something that have access to that money at 4.5%.
Build you more.
Right, it builds that way. So again, it's not a one size fits all model, but where the financial professional on the other end of the phone should be having these conversations with clients, because they may want to make that money and have access to it. Maybe $69 a month isn't worth it.
Right. And you said it also is credit score dependent. So if you don't have a great credit score, then you're not even getting $69 a month, because you're not getting as much bang for the buy down. Explain
Correct.
that a little bit more.
Yeah. So in this environment that we're in, because rates are dropping and we're in what is historically a high interest rate environment, if I've got a lower credit score range, let's say that 580 credit score, right? We can certainly do those. We just closed on one a few days ago. But that loan is a little more expensive because the investors on the other end know at some point in the next 12 to 24, maybe 36 months, that veteran's credit score is going to rise because they're going to make their mortgage payment on time. Well, they're going to refinance. So the market is going to charge more upfront for a loan of that type. So people are in this for profit, right? They want to make money.
They need to make their money up front before they lose it to a refi.
Correct, because when that loan pays off on a servicing portfolio, too many loans pay off, and that's what puts lenders out of business.
Yeah,
because they've hedged that money. So there's some economics behind that. But what I think we have the responsibility to do, and this is why I love what you guys do and how we partner together to do this, is having these financial conversations, having that honest conversation of where they are in the process and where they're at in their own reality right now. Not glossing over it, not blowing sunshine up somebody's, it's real honest conversations of where they're at, because that's what's required.
Yeah. And I'm of the opinion that the main source should be the lender. And that's why it's important to choose a good lender, somebody that's just not telling you what you want to hear and actually listening and advising you based on the strategy you're trying to achieve. And I'm also of the opinion that The agent has to be a partner in that. The realtor has the first conversation in most cases with them, and they're talking about their needs analysis and financially what they're trying to achieve. So agents, when you hear these questions, you got to dig a little deeper. You got to understand the math and say, all right, let's say a nonprofit gave you $2,500 to use. Well, let's do the math to see if that really works out, because if you don't have new furniture, maybe that $2,500 will be better served getting you new furniture or paying your car note for the next 9 months, or something like that, versus just saving $69 a month. And I know you've done that with many, and saying, oh, instead of putting the money down, how about pay off the car? Because you got enough to pay off the car, and paying off the car saves you $700 a month. But if you pay $15,000 to the loan, it saves you $100 a month.
Yeah, so, it's math. I think
but you gotta care. You gotta care enough to ask the question. You gotta listen. It's not just about a commission and a deal closing. It's these folks' lives. It's our military families that need this help and advice. So I encourage you to come from curiosity. Jason, I appreciate that. What I'm recapping here is a professional that's going to advise you is important, both with your lender and your realtor. Secondly, you got to do the math and understand what you're trying to achieve and make sure the maths. And then lastly, you have to understand the difference, what the buyer can actually buy down and what the seller can offer you. And I say, if you can get the seller to buy it down or the builder to buy it down, it's a no-brainer. Save your money and hack that interest rate that way and watch to see if it'll come down, because it'll come down. You just got to have the right timing. And when you partner also with the right agent and realtor, they're going to let you know it's coming down. They're going to be knocking through text and email, and you're going to be reaching out saying, hey, it's time to refinance. It's dropped 2 points. Because what is the rule on the EARL, real quick, on a refi? They like to see it, 2%, 1.5%? What'd you tell me for it to really?
The requirement from the VA on a VA interest rate refinance reduction loan, or the EARL for short, is the VA requires the interest rate to drop by at least 0.5%.
Okay. So if they're at a 6, 5.5.
Correct. They have to have the loan, have been paid on the loan from 210 days from the note date, the original note date. And they have to recoup the cost of the refinance in 36 months.
Okay.
So right now is a great time to look at doing things like that. We literally just had one of our past clients who bought when the rates were 7.25. He got 5.625 and saved himself $420 a month in a payment. And it only took 11 months to recoup the cost of the refinance.
Yeah, that's amazing.
Again, it goes back to financial assessment. And one of the things that I love about what you guys do, and we try to do this in tandem, is doing annual mortgage reviews and checking in, when these things come down, because let's face it, there's a lot of lenders out there and probably a lot of real estate agents who don't have your best interest in mind. They're only trying to make money off of you and advise you to do something that might harm you financially.
Yeah. Or just never met somebody like us that care enough to teach them how to care. Maybe they want to care, but they just don't, they don't know how to care. And hopefully they see this, it teaches them something, and they then act on their behalf.
Yeah, it's been that fiduciary, and that word that people like to use, and I believe that is that, is in this environment where it becomes sexy to talk about those EARLs and have those financial conversations. It's about real conversations, because it's not it's all. It matters, and I care and you care, and that's why we love who we help, and I think that is the starting point, is you have to care, and then the rest we can teach you.
Yeah, right? Enough to ask the question.
100%.
Jason, thank you so much. I know it was last minute for you to jump on, but I wanted to get this out so it can help her and other military families and veterans and buyers alike on how to have this conversation and the questions to ask. This is Jason Steyer, you all Director of Military Lending with Envoy Mortgage. I'm Chastity Rosales, a reservist, military spouse, realtor at Fort Bliss, El Paso. And we love doing videos like this to help. So reach out. We'd love to answer your questions. How can they reach you, Jason, if they have more questions about hacking this?
Yeah, you can find me online. You can go to VABossHomeLoans.com. There's a ton of resources there. There's a link to my calendar to schedule time to chat with me. That is your one stop for all the resources you need. So check out VABossHomeLoans.com.
Awesome. And we are PCSElPaso.com. I'm Chastity at PCSElPaso.com. We'd love to help answer any questions you have, and you all have an amazing day, and congrats for even having the conversation. BAH stands for Buy a House. The government literally pays us to invest in ourselves, so use the benefit that you've earned. Have an amazing day.
Love it.